Well, the Sensex and the Nifty ended a volatile Friday with marginal losses, but for the week, both the indices are up 1% and the Nifty has hit a record high for the 5th straight session. What's next? Well, this is the Editors Roundtable. I'm Sonia Shenoy and with me are Prashant, Nimesh, Nigel, all our editors here in the studio. And, we have a guest, of course, joining us as well to discuss all the market action. Vinay Jaisingh, who's the MD of JM Financials, will be with us. But, folks, it was a good week. I mean, the Bulls, give and take everything, the Bulls came out victorious. Yes. Record highs for the week. And, I think the ending was good.
You know what? I was about to tell you that the one thing that I've heard so much from you all of this week is record highs. Yes. Nifty at record highs, stocks at record highs. So I know it's been that kind of a week where, not in the index, but a lot of individual stocks have also hit record highs. So it's a good week. And the good part is the broader markets have done really well, right? I mean, the index is up almost 5%. So there's been a big momentum again back in the broader market. So that's actually been a positive sign. Index moving much higher, not much, doesn't add too much. But when the portfolio does well, the mid cap does well, that's when there is a lot of excitement as well from retail investors.
And it gives you sometimes heart attacks, right? One day heart attacks. Like Wednesday, the market sold. I think it was Wednesday, right? There was a sharp sell-off. We ended sharply lower, and Thursday, just like that, on the back of, I guess, Nasdaq futures, which were rallying. Nvidia, of course, was the big story in the second half. And I think as we come back into next week, I think it should be important because typically what we've seen over the last many Nvidia results is that because it is such a large, it's actually bizarre the weight it has on the US markets. It's led to 5-7% rallies in the US market. After that, I'm not sure if we'll get that. But if we do get that, then everything changes, right? Yeah. All the questions, all the doubts that this has become too much, too excessive, all those disappear.
Oh, absolutely. And, just a couple of things, right, to point out about how this week panned out for the markets. The Sensex Nifty and the Nifty Bank gained for the second straight week. It was up almost about 1%. The mid-cap index actually rose for 4 straight sessions now and is up 5% in the last 4 weeks. And a lot of Nifty gainers from the auto space. So M&M was one of your top gainers this week. In the banking space, ICICI Bank gained this week. Sun Pharma, Nestle and Grasim, of course, that was the big headline with Grasim entering into the paint space. In terms of losers, Hero MotoCorp, Coal India, BPCL, Divi's Labs and HDFC Life. So a couple of these PSUs came off a little bit this week. And in the mid-cap end of trade, Indian Hotels was really the stock of the moment. And that was the stock that did very well this week, apart from ABB, Vodafone Idea, etc. that did well. But what's the buzz in the dealing rooms?
Well, Sonia, a few things. One, as I said, you've been talking about it, record highs for the market, the mid-cap index of 5%. But few things which stood out for me. One, I highlighted the resumption of PE and promoter stake sale. So that was very much visible this week. Some large blocks, right? 24% of Whirlpool. MNC selling 24% in a single day. That got sold out. Few PE exits in the likes of Sula. There was a 12% block in Eureka Forbes as well. A 4.5% stake in Devyani. So a lot of these kind of blocks happened. And looks to me that that trend is going to only continue and further accelerate. So that's something to track next week as well. The other big theme was a bit of underperformance or a bit of profit booking in the PSU basket. Look at the OMCs. All the 3 stocks are down almost 10% from the recent high. So clearly there was a bit of profit booking there. Some bit of profit booking in the PSU bank stocks as well. And these have done really well, right? The stocks are up 2x, 3x in a very short time. So some bit of sanity was there in the PSUs as well. But as I said, the momentum clearly seems to be in the broader market. So that was a big theme. But I guess, Nigel is going to put some more light into it. But I guess there was a return of one big, large conglomerate, which is the Birla Group. So much of news in that camp, right? Whether it's Hindalco, whether it was Idea for that matter on Friday. So that group looks like coming back now. But the bigger themes is like the exits of PE and promoters is likely to continue next week as well.
Okay, well, Vinay Jaisingh, the MD of JM Financials, is also joining in. Vinay, how are you feeling about the market now? Do you think that this rally that we've seen up until now has more legs? And if yes, what are the pockets that are looking good to you now?
So I definitely think the market has more legs. More than market, I would tend to believe lots of stocks have a lot more legs. There are a lot of triggers, right? The first trigger is, the technical inflow. FIs have been selling off late, but if you look at the last 3-4 months, despite the $3 billion which they sold off, they're still up, as much as $8-9 billion. They are today at, a 10-year low of about 17% as compared to a 20% FI ownership. So there is money, 3+% bound to come in at a time wherein you're seeing MSCI put India's weightage higher and higher, and China's weightage lower and lower. FI seemingly are reducing weightage, which makes no sense, because the second trigger, which is the economic trigger, seems to suggest Indian equity markets, more than Indian equity markets, Indian GDP is set to outshine. Today we are adding between 15 to 20% of the incremental world's GDP. So again, too many positive triggers. Every time you see the GDP numbers come up, there are lots of smiles. The third trigger is the earnings growth. I don't know how many quarters since I've been looking at the numbers. It's been only about finance, right? Now you see the finance sector probably grew 21, 22% in the BSE 500, but the rest of the space made the overall growth, including the energy space, to as much as 25%. So you've got a lot more legs of earnings growth. And finally, the corporate capex growth, which I think will come closer to post-elections. Once everybody starts seeing, that yes, the election's behind you, the corporates get a lot more confident and you'll see them move up. So lots of legs coming up out here, for us to believe that the market is slowing down.
All right, Vinay, we'll come back to you in just a bit, but what Nimesh was highlighting earlier, right? The Birla Group companies were all in focus, and for good reason. Nigel, you've done some work?
Well, that's right. All through the week, we heard a lot about that. So let me go across the ball and, detail that. The Birla Group companies, they made a comeback this week. All three of them, started with Hindalco. Then you had Grasim. And the third one was Vodafone Idea as well. So it was a fairly eventful week for all these three stocks. Let's start off with Hindalco first. It was in the news because they said that they're likely looking to list Novelis in the United States. So Kabhi Khushi Kabhi Gum, right? A couple of weeks ago, we had that painful news coming in that Novelis had upped their capex. This time around, they're saying that they could be looking at an IPO out there. So that was something that the street was looking at. A couple of questions remain unanswered, though. How much stake will they sell in Novelis? And why are they doing this? Why does Hindalco need the funds? So a couple of question marks continue to remain. What's the street's verdict, though? The street would have preferred if they did a fresh issue of shares rather than do an OFS. Why is that? Because if they do a fresh issue of shares, then Novelis will get the money, and Novelis needs the money, not Hindalco that comes here to India. Besides that, it may not be the most tax-efficient method, because the one that needs the money is not really getting it, and it could also attract a holding company discount in the time to come. Besides that, you have an option. The FIs, well, they hold stake in Hindalco. They'll say, why do we own in Hindalco? We'll go and directly own Novelis. So that could be another point. And there's no big reason for the stock to re-rate from here. That was the brokerage verdict that came in, whether it was Nuvama or whether it was Investec as well. So that's about Hindalco. Next up, Grasim. They have forayed into paints. This was long awaited. Mr. Kumar Mangalam Birla, he says that in the next 3 years, well, they expected to do 10,000 crores of revenues, and they expected to turn profitable as well. The street's verdict was, well, diversification is positive. As of now, they're into VSF as well as chemicals. That's a core business. So paints is obviously a far more attractive sector. There is growth potential there. There is ROC benefit as well. And it's not very commoditized. It's more B2C. So those are all the positives. So the street likes what they see. Now, the problem is for Asian Paints, because it appears it's a case where David is taking on Goliath. Why is Asian Paints a little bit under pressure? Well, the industry itself is likely to see capacity addition of around 25%. Most of that will be Grasim. The remainder of that will be from Asian Paints itself, because they're increasing capacity by 50%. Competition is being upped out here, whether it's JK, whether it is JSW Steel, Astral, Pidilite, all of them throwing their hat in there. And revenue growth for Asian Paints has slowed down in the past. And if they're going to make more gross margins, bulk of that will really pull out back into, into ad spends. So that could be a problem for them. And as it is valuation-wise, not very, very cheap. And finally, Vodafone Idea. Towards the end of the week, you had comments that came in from Mr. Birla. He says that he expects, the focus continues to be on Vodafone Idea. They're looking at raising some funds as well. So it'll be interesting to see what is the quantum of funds, how much do the promoters participate, and how much can it deleverage their book. So all these three names, they came back, and Mr. Birla was in business all through the week. Vinay, let me come across to you. What's your view on these themes? Whether it's Novelis, Asian Paints is up for a bit of a challenge, or if you want to talk about Vodafone Idea as well, any view on any of these three names?
So, very quickly, a couple of comments on each. Let's start with the easier one, which is paints. Clearly, when competition is seeping up, the demand is not going to grow as much, right? The demand historically, if I look at the last decade, has been at about 1.2, 1.3 times the nominal GDP. So 14 to 15% is the overall demand number which will come up. All of a sudden now you have not one but three new players. All three of the players are industries which are to be reckoned with. One is obviously Grasim, but let's not forget, you have JK Cement and JSW Paint. So players who have their nexus to distributors who do some building or building construction work in the overall arena. You're seeing the Indian government increase the capex as well. So distributors are going to be talking to these three players for more reasons than one, be it for cement or be it for steel. So you will see these players be a lot more serious. Obviously, Grasim's reach, the way it's coming up on day one, seems to be higher than the number 2 player, both in terms of the overall size which they would come up in capacity and the distributor reach of, north 50,000. They're talking to about 95,000 odd distributors. 54,000 of them are servicing them already in the cement part. So these are big numbers. So I think the paint industry could have a derating. Having said that, the price to book for the paint industry is as much as, north of 5 times. If I were to look at it with a Grasim perspective, it's a great thing because at one time they were investing in companies like Vodafone, and the big question investors were to ask Grasim is, why don't you focus on where you think your return on capital employed is going to be a lot more positive? And that's where paints came into the picture. And now, they've got kind of a horse's benders because they're putting a lot more money in paint. So I think that's a thumbs up for Grasim of what they're doing. But they're getting into an industry where they will be able to break the moats, and it's not a great sign for the industry as a whole. So that's on the paint part of it. In the aluminum part of it, I think it's the same comments you made, so I won't repeat it. There are a few loopholes where the company needs to be telling us why. But simply put, I think they're expecting the valuations of what US companies would give them compared to India be a little bit better. I think that was the only logic, we could look at as a company. Moving to your third question on telecom, if I were to look at Vodafone Idea just as a company, not as a stock, at 2.2, 2.3 trillion rupees of debt and with an EBITDA which is so much smaller, this is a company which needs equity. What better time to raise equity when the market is close to its top and you're seeing the ARPUs move up? So technically, the telecom industry can get a lot more healthy. All the operators, not just Vodafone Idea if it succeeds, but all the operators would start seeing a lot of sanity coming into the picture if it succeeds. So I wouldn't bother as much about what happens to Vodafone Idea when it does the equity issuance. It will save a company which could have a lot of pressures because the debt it's mounted up, but the entire sector in telecom would go into a lot more saner levels, and you'll start seeing ARPUs inch up out there.
All right, Vinay, thanks very much for that. There's a pretty comprehensive sort of run through of different sectors, but of course the Birla companies in each of these sectors as well. Now PSUs have been on a roll, right? Massive gains in the last couple of years, but the question is, will it continue? Nimesh is here. He's been kind of beating the PSU drum for the last 1 year or so. Nimesh, what's latest?
So, Prashant, as you rightly pointed out, the index has done very well. A lot of stocks have done well. But today I've looked at the data where has been the highest institutional participation in the PSU stocks. So let me just go to the wall and put the data out. So, if you just look at the PSU index, since the beginning of this year, the index is up 21%. But since October 2020, when the really PSU rally started, the index is up almost 280%. So that's the kind of index move we've seen. Now, what I'm doing is we're looking at where the FI holding has been the highest within the PSU names. So some names stand out: NMDC, BEL, HAL, and the PSU bank stocks like Bank of Baroda, Canara Bank, Indian Bank, and Union Bank. So these are the few names where the FIs have bought aggressively within the PSU names. But if you look at the DI concentration, that's been largely in the stocks like Gujarat Gas, Nalco, Concor, and some PSU banks like Indian Bank, Bank of India, as well as Hudco. So that's been the stocks where there's been a massive accumulation. Now, I've just broken down into various sectors as well. The first sector is utilities. Now, within the utilities, the biggest swing or the biggest accumulation has happened from the FIs in power grid. Their ownership is now 31% versus minus 2% a year back and just 2% 5 years back. And so is the case with NTPC and GAIL, 17 and 14 versus in GAIL, there was hardly any participation or institution holding 5 years back or 1 year back. So that's the utility space. But if you look at the DI swing, the domestic institutional investor swing has been the highest in NTPC. That's come to now 27% holding versus minus 1% a 5 year back. So there's been a big of lap, accumulation happening from DIs in that stock. Now, if you look at the material space, in the material space, the highest FI holding has increased in Nalco to 12% versus minus 3% a year back. So that's been a big swing there. Others like NMDC, Coal India and SAIL are the other names where FIs have lapped up aggressively in the last 1 year versus the holding was virtually zero a year back. But within the materials, the big swing from the domestic side has happened in Coal India. That's been the big stock which has been accumulated by the domestic funds. Now they're holding close to 23% versus their holding was just 1% 5 years back. So that's what the DIs have bought within the material space. Now, if you look at the industrials, now this is an interesting chart. Within the industrials, FIs have aggressively bought Concor. They now have an ownership of close to 20% versus just which was minus 2% a year back. So big swing there. The others like the two, HAL and BL, that's been accumulated aggressively, and the likes of IRCTC and even BHEL has been aggressively accumulated. Now they own close to 7% ownership versus virtually minus 1% a year back. So that's been the swing in the industrials. But within the industrials, where the domestics have bought aggressively is BEL. Their ownership is now close to 22% versus minus 1% 5 years back. I'm just quoting all the data from Bernstein report. The next sector is the financials, especially the likes of REC, PFC. They all have done very well, but that's where the big accumulation has been. REC, PFC 18 and 21%, and the PSU banks like Bob Canner and SBI has bought the FIs have bought aggressively within the financial basket. But in the from the DI's perspective, the big swing has happened in SBI. Look at this, 22% is what SBI has been cornered by mutual funds now versus minus 1% 5 years back. So that's been a big swing in the PSU banks. The last one is OMCs. A big move in the last 6 to 8 months, but look at the HPCL, BPCL and IOC. The swing has been like 14% versus virtually zero for 1 year back. BPCL now they own 14% versus just 1% earlier, and the likes of IOC now they own 9% versus just 1%. So there's been a big accumulation within the OMCs as well from the larger FIs. But the big swing has happened in HPBP from the domestic side. They now own close to 21% of HPCL and BPCL versus having zero holding 5 years back. So this is what the data suggests from Bernstein note. While there are only select stocks within the PSUs where the DIs and FIs have bought, but the swing has been quite large in the likes of SBI and HPBP from the domestic investors.
Right. Nimesh, thanks very much for that. Vinay, if you want to weigh in, from what I recall, you don't have very many PSU names in your portfolio. I think BEL is one, right? You used to own BEL. I'm not sure if you still have it in the portfolio. And anything else you've added recently?
So, lots of themes you were saying, we were smiling. So we do own a lot of defense names, not just BEL, but also Hindustan Aeronautics, Bharat Dynamics, but bought at cheaper levels. We like PSU banks a lot. We've been, we had the pleasure of riding the rally, be it SBI earlier, BOB now, as well as, we've gotten to Can Bank. So, attractive valuation, great dividend yield stories, and then, you move on to robust growth. That's what we are focused on the PSU space. Where I guess we are not as much in the PSU space is in the PSU energy basket, which itself has done very well. We do, like NTPC because it's getting a lot into renewable energy. You're looking at that company have a 60,000 megawatt capacity with incrementally 20 more thousand megawatts coming up, and that too in renewable space. So that'll make it a very exciting story, not just on valuations, but also on earnings growth coming ahead. The reason why we're not liking the energy names are, think of it, let's say 1 year ahead. Today, your marketing margins and your refining margins are very robust. Your marketing margins are probably 3 times higher than what they were historically. That is bound to change. You're bound to see petrol, diesel price cuts as time takes its place. Not oil prices move up, but petrol, diesel price cuts. These superordinary margins, when they move away, the EPS of a lot of these companies, especially OMCs, in our analysis will come down substantially. So that's a space we've relatively avoided.
All right, we'll take a quick break on that note. But on the other side of the break, Japan's Nikkei hit a record high after 34 long years. We explain the significance in just a bit. Stay with us.